is going to get on the panel. That's going to be the main piece. Maybe we'll ask a question or two, but we do have about 57 minutes. So I think with that, let's get right into things and get started. Welcome everybody. This is a successful trading styles panel. Found a few investors who are doing something a little bit different from other people or explaining it a little bit better than other people and wanted to bring them up here to highlight them and allow people to learn from them. Let's get right into it, starting with yourself, Daniel. Probably about 7-8 minute slot. Would love to hear for you to just break down a little bit more about your trading style for the audience.
Sure. And again, thank you for giving me the opportunity to join in today. If anyone's been on my Twitter account, most of my entries and exits all look pretty much the same. And I detail that in my Learn to Fish courses. I really just use two, and primarily one, but effectively two indicators to be able to trade. That's the MACD and RSI. And I use the MACD to be able to tell me entries and exits. Honestly, I don't care what the upper half of the chart does. I don't look at it. I don't use it. I don't believe in candle patterns. Everyone does. Hey, good for you. But what I do is, if I kind of sum it all up, I have a rotation of stocks that I go to. So I'm not searching for new things all the time. It does not mean that I don't take advantage of new opportunities as they come up. But I always have like a home room of stocks that I go to. And I will trade them in layers. So the same stocks that I will day trade, I will have swings in. And the way I manage my swings is basically on the hourly and on the 4 hour. That allows me to have minimal capital exposure into the market, have virtually a guaranteed return because I'm able to read what's about to happen in the near term. So less chances of any risks of surprise or this type of thing. And I trade those in layers. So I will have a day trading layer. I'll have a layer on the 1 hour, a layer on the 4 hour. And as each one gets to its top position, I end up eliminating that, which limits my risk as well. So, one of the ones I've just it's about to close out here is Nordstrom. Is one of the ones I trade on a daily basis. Nordstrom pays me somewhere in the neighborhood of about $3,000 a day. Which is decent for a stock everybody thinks is a dog. But you can really do this off of any particular stock that you're interested in. A lot of my students, they're interested in ones like SoFi. Maybe they trade PayPal. Maybe they do whatever it may be that they really want. But that 1 hour and 4 hour technique, it's very, very consistent across a wide range of stocks. So they can pick ones that are very, very stable. And that's one of the things I recommend. So in my stable of stocks, in my rotation of stocks, I don't use any of the ones that are, gappers or any other bullshit. I look for a stable business. I look for ones that have consistent volume. I have looked for ones that have very few surprises. Because basically the name of the game for me is I want to get paid every day. I don't want to have a bunch of surprises I have to deal with or be able to react to. I want to be able to get paid every day. So I look for really, really stable names. Some of them might be boring to some people, but the results show up. I post the receipts on my Twitter account. I share the methods in the courses and through the coaching that I offer. And it's very, very simple. The technique works whether the stock is going up or it's going down. And it works in all markets. So it's a simple, repeatable process that I prove out every day. And the beauty of having that layered approach ensures that I'm getting paid on a daily basis, and the stock is on the hourly. It's giving me a weekly paycheck on top of that. So it creates this compounding effect on your trading account. And while it's not a lottery ticket, because I know that's what attracts a lot of people is, hey, how can I find the one that's going to go up 300%? What it does is it takes a lot of my risk off the table and allows me to continue to bank over and over and over again. That's the method in a nutshell.
So a couple questions on that. One of the ones you mentioned last time was BX, right?
Yep.
So
I love
walk
BX.
us through walk us through your process. Let's say today's chart, I have it up. I have 65-minute, candles up right here. I've got the MACD up, I've got the RSI up. Walk us through kind of your process on how you would get in and out on that on something like today or yesterday.
It'd be so started scaling in yesterday, so you could see it on the 1 hour chart for a swing, and you could see that start to be confirmed on the 4 hour chart as we got overnight and into the open today. I will ride that up. I've ridden BX multiple times. And what I encourage people to do is manage that trade. So even if you get something like where BX first dumped down here into about the $100 mark or thereabouts, anytime it goes on sale like that, it's a company that makes money hand over fist. They have a wonderful free cash flow margin, enviable, in fact, better than BlackRock. So it's a solid business. Is not going anywhere. That's sort of checkbox number one. When you're in the trade, though, manage it. So even though you're coming in on those longer time frames, perhaps even if you're trading it on the daily, manage it off the 1 and 4 hour, so you can manage those natural peaks and valleys. And the way to do that is exactly the same way that I judge getting in at the bottom and getting at the top. I'm reading that MACD. I'm knowing where it's sitting. I'm knowing where we've got a change in direction coming, and I simply exit out that position. So I will exit out. My golden rule is about 2/3 to 75% of my position. I'll take that downside on a minimal, and then I'll come back in. So it's the same thing here. I started scaling in yesterday, where you could see it set up on the 1 hour. That confirmed on the 4 hour, so I'm happily waiting it out.
Very interesting. So, kind of breaking a little bit more in on that 1 hour, if we were to look at BX again this morning, and I'm just trying to do this so everybody has a good understanding of these charts, we could see that the MACD. Oh, do you have specific settings on your MACD? I
Yeah,
know that there's fast, slow, and signal. What do you have those usually set to?
I use Wilders 10/26/9 on Wilders.
Okay, interesting. 10/26/9, got it. Um, so on 10/26/9, we could see that there was the cross. That was around. When did that happen? That happened yesterday. I'm seeing it
Yep.
at 4.
So we actually dipped down to about 126 ish at the very bottom yesterday. Now, with my technique, and the same thing I tell people, unless it's a day trade, I'm really not concerned about nailing absolute bottom. What I want is a confirmation that my capital is safe. So on a swing trade, I will go in fairly heavy. So for example, for somebody like for a stock like Nordy, that I'll trade over and over and over again, I'll buy 20,000 shares at any given time on the 1 hour. So when you're making a $500,000 bet, I want to make sure that my capital is safe. So for any of these type of swings, I will wait for the confirmation. I will scale in order to ensure that that is safe, rather than try and hit the absolute bottom. So I added more this morning, and like I said, just happily riding that up as it confirmed.
Okay, perfect. Awesome. Well, I appreciate you sharing that with us, Daniel. And I know you only had limited time to give all the info about, your trading style. Where can people find more about it?
Well, I post everything about it on my Twitter account. My Learn to Fish courses. You know what? I love it when people tell me that they've taken the course and they're suddenly green for days in a row. And that's the whole point. I've tried to simplify this down so it's accessible. I mean, it's one thing that I have a finance background. I don't expect everybody else to. So I tried to make it as simple as possible, as accessible as possible, and as visual as possible. I think it's the one thing I try and teach people is try to make trading visual, so it becomes an if-then equation, and you're not sitting there having to think about it in the moment.
Perfect. Appreciate you being up here, Daniel.
Thanks, Wolf.
Cool. And well, let's go to one of your friends who you recommended, we bring on today. And I was pretty excited. So first off, everybody should check out what Ben's doing, and you can take a look at his bio for just to see some of the things, the 500 to $51,000, as well as everything that he's been doing. And then for anybody that's interested, while Ben's speaking, I went ahead and pinned this up top. He is doing a special deal during this space. He does have a course called Trade to Win. I actually have been looking through the course, and I'm really liking what I'm seeing. A lot of education. A lot of people come to me And I think they want someone to teach them, but the educational materials in here, in addition with the fact that he will be hands on, it looks fantastic. So there's education, there's a trading system, there's indicator, bot killer, there's like a whole bunch of stuff. So I won't go too far into it, but basically you can get a discount off that using the code Wolf10 pinned up top, and you can check out everything that Ben is doing as well. And I will turn it over to Ben to discuss, in 7, 8 minutes, a bit more about his trading style.
Thanks a lot, guys. Can you hear me well?
Yes.
Cool, because I'm in the countryside in France. As you can hear, I have a French accent. Sorry, guys. But I'm in the countryside, so the connection is not so great. So let me know if you can't hear me anymore, and I will try to figure out. So first of all, thanks a lot, because it's really a pleasure to be here today. I'm really glad to be part of the speakers in such a nice company, especially Daniel that recommended me to you guys. He's the one that detected me, let's say, on Twitter, and I will never be grateful enough, man. So thanks a lot again. Just a quick intro, because I never spoke here. So I'm living in Switzerland. I'm 31. I was working on the biggest e-commerce project in Europe during a few years. I was leading 45 people and so on, getting nice paychecks, but in the end, you realize money doesn't matter. You realize freedom matters, and that it doesn't make sense to make a lot of money if you work like a rat, if I can say, every day, and you can't even enjoy your money, let's say.
You cut out for anybody else?
Ben, I think we lost you if you can hear us.
Yeah, he cut out for me too.
Okay. He did mention that his service was a little bit rough. Okay, so we will try to get Ben back up here. It looks like he's back up. Okay, Ben, we got you. Do we have you? I think we have you. And he's gone. All right. I'll try one more time to get him back up here. If not, we will move to Miguel. Okay. We are waiting to get back up. What's up, Daniel?
No, I didn't say anything. Sorry.
Okay, got it. Yeah, I'm DMing with Ben. Hopefully, we'll be able to get him back up here in time. If not, we'll definitely bring him on either again or later within the same space if we can get him back up here. But I do want to keep the show moving. So, Miguel, would you like to do your piece now, and we'll have Ben go after?
Certainly.
Actually, well, give me one more try with Ben, because he did reload, and if it kicks him out again, then we'll go to yourself, Miguel. We'll just give them one more shot since he had started speaking. Ben, you up here?
Can you hear me?
Okay, we can hear you.
It's so boring, guys. Sorry. Can you?
Yeah, we can hear you. All you.
Okay, good. So first of all, thanks a lot, guys, for having me today. It's super appreciated. I'm really glad to be part of the speakers today, especially Daniel, because Daniel was the one who detected me on Twitter, let's say. So I will never be grateful enough. Man, thanks a lot again. Just a quick intro about myself. You can hear I'm trying to hide my accent, but I'm French, so I simply can't hide it, sorry. But I'm living in Switzerland for a few years now. I was working on the biggest e-commerce project in Europe. I was leading 45 people and so on. I was getting nice paychecks, but in the end, you realize money doesn't matter. You realize freedom matters, and that it doesn't make sense to make a lot of money if you work like a rat every day, and that you can't even enjoy your money, let's say. So it was really killing me. So I came to trading 4 years ago. I won't lie, I blew up 2 accounts the first year. I wanted to quit. I was burning the money that I had saved and so on. And I thought it was simply not for me. Then I paused a bit. I refocused on basic trading things. I really relearned the basics from scratch. And I also worked a lot on my emotions. Then I realized that at this time, the markets are rigged by bots and algos, because I had read news explaining almost 80% of the orders were executed by bots. So I was like, okay, it's impossible to win here, I'm out. But then it turns out I had a friend working in the banking industry in Geneva who had access to how the bots and algos are coded. So I simply replicated the same thing, and that's how my indicator was born on TradingView. So I can tell you guys what the bots are doing. It's all in all about supports and resistances, meaning pivot points, Fibonacci's and trend lines. There's nothing else. It's not rocket science, really. So with that being said, a bit like Daniel, I will 95% of the time pay when the stock is at its lows, let's say, during the day. But on my side, I will only pay the top gainers because if I pay a reversal on the top gainer, I know it's backed by a bullish trend and some volume. So 30 minutes before the open, I would select the gainers based on the volume, and I would simply wait for things to calm down, the price to land on one of my supports, and I would enter based on the RSI, MACD, and my internal kitchen that I reveal in my course. That strategy pays me literally every day for 2 years now, and the members of my group are starting to make some gains based on that. So I'm super happy to see it's actually replicable. I think that's the key here that we are discussing into this chat. So essentially, if I have something to say to new traders or even more experienced ones, but not successful yet, you don't need to wake up 3 hours before the market opens. You just need to select your plays 30 minutes before. You need to let the dust fall, enter on the low point, which would ideally be on a support where the bots buy two, and that's it. There's really nothing complex. Once you are done and you reached your target, you get the fuck away from screens and back to normal life, let's say. That's exactly what we did today with DCFC. We paid it at $13 and it ran to $90. So bottom line, just be patient. Don't pay the highs. I believe it's 80% in your hand, and the remaining 20% of skills will do the rest. Then regarding money management, because that's something which is really crucial for new traders, I have to admit I mostly go all in because most of the time I've been waiting very patiently for the best entry. So I know it's safe, but I still wouldn't recommend it for new traders. Just go gradually. I often say cut your losers and let run your winners. I don't know a single trader that is profitable cutting at -5% and taking profits at +2. And to finish, guys, if you want to join the gang exclusively created for these spaces, I've created a coupon code, so you have 10% off with the code that Wolf published on his Twitter. And that's it. So if you have any question, feel free to ask, and thanks a lot again.
Absolutely, Ben. So let's just dig a little bit deeper. So inside of the course, that I'm looking at, I don't want to give, anything away, but there's clearly, especially in this education system, there's a whole bunch of different trading techniques that you have really built out these beautiful, I wouldn't call them PowerPoints. They're more of like, I don't know what to call them. They're like PDFs, I guess, that really like walks through, explains every detail, has pictures. And there's a lot of different moving pieces in here, right? There's MACDs and moving averages, Bollinger Bands, RSI, Fibonacci.
Exactly.
You break it all down really well. So, for people that are beginners in this crowd, this is probably the type of content that you want to be looking towards. What do you see yourself using most often on an everyday basis? You going to make a trade. What are the first few things that you look at?
So the first one would be definitely the supports and resistances, because when I blew up my two accounts, I was not clearly checking the supports and resistances, and I figured out that's the main thing of this game. It's supports, resistances. So when I day trade, that's the first thing that I'm checking. So I would be buying on a resistance or support mainly. I would check the MACD. I want to check the MACD that is red. I want to see it curling. I want to see the RSI under the 50 level because all the traders are checking the level 70 and 30. But to me, the most important one is the level 50, because if you are under 50, you are bearish. If you are over 50, you are bullish. So what I want to do is to catch a reversal into the trend under the level 50. So I check the support, resistances, MACD and RSI, as I said. And then I have my special recipe, let's say, with the things that I found, with the bots and algos, which is the indicator that I developed. And that is giving me some crazy levels, to be honest. And that's really why I'm saying that the markets are rigged, because you could see that really sometimes the price really falls and stops on a support, and that support is most of the time a Fibonacci, always. It happens on stocks, on cryptos, and it's always the same. So the bots are buying on a specific Fibonacci and they are selling on the upper one, and that's always the same moves. So my strategy is basically to do the same, because I'm not stronger than the bots, I'm not stronger than the hedge funds, so I'm just doing the same.
So discussing support and resistance, and this will be the last question I put out there, and then we'll bring in some others too. When you're looking at support and resistance, that can be a pretty arbitrary thing for a lot of people, right? There's many ways to find them. You can use moving averages. Like support and resistance are created by the other indicators and price action and movements like that. So, when you go to establish support and resistance, is that often being created by a moving average or a Bollinger Band or something else like that? Is that how you're finding it?
Never. It's always either Fibonacci's, either pivot points.
Can you explain pivot points real quick for the audience?
Yeah, pivot points, basically, it's doing the average, well, how to say that in an easy manner. It's the average of the previous days. So it's drawing some supports and resistances on your chart based on the previous price action.
Perfect. So, Ben, is there anything else you want to add in here on either the course or your trading style?
No, nothing. I just would like to say again, thank you to you, man, and as well to Daniel, because I'm quite new to Twitter, even if I'm trading for a few years. But again, thank you to Daniel, because he's been key in my trading journey on Twitter. He's one of the only guy that I know is really trading, if I can say that. We have a lot of noise on Twitter, and Daniel is really a big man. So that's the only thing that I wanted to say. And thanks a lot, guys.
Perfect.
Thank you, Ben. And if I can just chime in, whoever who is not following Ben, you really should. He's probably one of the best traders I've ever encountered. So I really respect the guy.
Don't say that. Come on.
Love it. Yeah, definitely been enjoying the content that I've been seeing from you, Ben. I'm certainly going to be using this course. And again, if anybody wants to check that out, there is a discount code that's active right now for my followers that is up top and pinned. Okay, awesome. Let's keep it rolling here. Miguel, good having you on again. Would love to give you about 7-8 minutes to walk through your trading style.
Hey, Gav. Thanks for having me on. And Ben and Daniel, I appreciate your guys' insight and analysis. I use a lot of the tools of what you guys were just talking about. And I definitely gave you guys both a follow as I've been listening to you. So I appreciate that. Today, personally, I just wanted to focus on something that I find extremely simple to make it very simple for the audience to understand. And I think Ben was talking about moving averages before. A lot of ways that I approach the market is just looking at price. And there's indicators on the chart, right, such as Ben was talking about. Hold on one second. Let me just switch to my headphones are dying. Can you guys hear me?
Yep.
Okay.
Yeah.
Thank you. So what I use is a simple moving average, right? I use various moving averages on my charts, but I think one that is really, really good, and if you have nothing else except for
candlesticks, which I use in my charts, you should have the 200 SMA, and you could have that and pretty much no other moving average on your chart, and you could determine what the market is doing over the longer term, or even stocks over the longer term, and if you want to be short or long. And the reason for that is it's a moving average that a lot of traders look at, and a lot of institutions and investors look at, I think, also, because not only do retail traders use this, also institutions use technical analysis, believe it or not, right? There's plenty of high-profile Twitter accounts out there, and they talk technical analysis, and these institutions look at it as well. So if you look at the SPY chart yesterday, I had tweeted something out on Essex Trading. I tend to put more of my charts. So if you guys want to follow that, that's at Essex Trading. And I try to do my individual trades on this account, WizDay Trader. And as you guys can see, I'm doing something where one client has recently allowed me to show the some of the trades I have been making. But SPY held the 200 SMA yesterday, and that was a really big tell for me. So I was like, well, I can't really get too bearish. We're holding the 200 SMA. And look at today. I mean, we've gapped up. It's up 1.43%. And that's just a really great, simple indicator. So if you want to be bullish or bearish, right, the SPY, right, was over the 200 SMA. Gavin, I think you were trading Tesla into earnings, right? So Tesla, we'd been below some key moving averages, and then we got that huge down day on Tesla, and Tesla held the 200 SMA on 128, 2022, and I wanted to be getting out of any hedge positions I have. It also created, which is called an ABC down wave and Elliott wave theory. But that's kind of getting, to further technical analysis. But what's really simple is it hold that 200 SMA, right, which is really important. Now we could take a look at another chart, JP Morgan, right? It gapped down on earnings and sliced right through, and what's called is a flat 200 SMA. So the SMA, the simple moving averages, is just a mathematical calculation of price over 200 days. Right? And so it's flat, right? That means that what can happen during that time frame is price can gyrate from one end of the spectrum, to another end of the spectrum, and we can have a lot of volatility in a stock. So JP Morgan gapped down and then sliced through that 200 SMA, and you could basically, on the gap down, I would already be concerned on earnings. And then I'd want to be shorting it, right? And now we're dealing with a flat 200 SMA. The 200 SMA for JP Morgan is at 160. And then a Fibonacci is at 160.50. So that's concerning as well. And we also got the RSI was a little bit oversold. So, it's also an area where people who were long JP Morgan probably were exiting their position. So, again, you can see how each chart that I'm referencing, it's a very important level, right? Facebook just got absolutely annihilated in their earnings, right? And came down like 35%. Well, what was happening with Facebook before that? We were consolidating here just for a long time, and we actually had a bearish pattern. I tweeted out a chart that if we couldn't get above 353 on Facebook, it wasn't going to go well. It was a rather funny tweet. And look at that. I mean, we tried to pull back up into the 200 SMA for Facebook right before earnings, and you probably don't want to be long, right, unless it gaps up above. And you can use it as an indicator, like even during earnings or intraday, right, because it's important. And then obviously we always want to be managing risk anytime we do this. Apple Apple's a great one, right? So I was short Apple. I've been talking about it on Wolf Financial. I was short, and then we took some profits, or like 110. It pulled back. That was the day that I was on the Twitter space. Came back, failed the 20 SMA, so it's another important area. Pulled back, and then it didn't fall below the 200 SMA. And Apple's 200 SMA is rising longer term. So, I was taking profits at the area that we talked about, and then, we could be just short, but I didn't want to get too cute, and I was actually short, and the earnings were spectacular. So you get out of that, and, I have some longs now. We'll see what it needs to do, but it's been above this 200 SMA and 150. And maybe we'll test these all-time highs here. We got some, resistance around 178. Let's look at some other charts. Semiconductor above the 200 SMA today. Well, that's interesting, right? Important area on the daily chart. However, this is flat. So again, another thing that's been concerning. But we've, closing above that 200 SMA is important. So now let's take a look on a little bit longer time frame. So we've been talking about the daily chart. AMC on the weekly chart is at the 200 SMA, right? And you see a lot of tweets right now, and I've bought some recently for my client around 1503. And it's been performing very well because I think that the weekly 200 SMA is a critical juncture for the stock. So we'll see how that continues to hold. I would love to open it up to anyone that wanted to ask about a stock. I don't know if Gav, if you wanted to have someone come on, and then I could reference that.
Unfortunately, just due to limited time, because we have another space at 3, we're not going to do questions or a specific stock analysis today. More focused on technique.
Yeah, no problem. So that's pretty much what I wanted to focus on. I'm going to tweet out the blog that I created showing you step by step how to create your own charts, right? It's really simple. You can just go by step, and you can use investing.com or your own charting software from the Essex trading account. And I just did that. So you guys can take a look at exactly how a professional trader goes through and identifies how they set up their charts, and then what's the important area for that, how they want to get long, and when they want to be taking profits.
Perfect. Yeah, definitely tweet that out and feel free to pin it up top.
Sure.
Perfect. Thank you, Miguel. And we can reference people back to that. Appreciate you being on here and sharing. Definitely following moving averages, especially the 200. I use the 50 a lot also, are pretty powerful strategies that certainly are built into algorithms.
Yeah. Thank you for having me on.
Awesome. Okay, let's go Juicy. And then I see we got Stock Talk in here. We'll go to Stock Talk after. What's going on, Stock Talk? Chilling. Stock Talk Daily. Okay.
What's up? My bad. I was on another
Doing good, man.
phone. Yeah.
How was your brother's birthday party? Good?
It was good. Yeah.
Fantastic. Okay, man. We're going to go Juicy first, and then I'll come over to you. All right.
What's up?
Juicy, all you.
What's going on, man? Hope everybody's well. A little bit about myself. I don't want to throw numbers out here, but I've done very well over the last 10 years. I was with a bigger chat room back in the day called Precision Capital. We separated. I started Juicy Trades, and I've pretty much been running the show since then. But getting into technique, I'm a big believer in price action is king. This is just how I trade. This is just how I see the market. I do have indicators on my chart, but it's kind of crazy how a lot of times I don't even look at them. I'm only looking at price. Price is pretty much everything. I'm a big believer of what's known as inside, outside day strategy. And we could talk about it, use some examples, and I use plays reversals. So today I caught a $21 move here on Google, and I called this out live yesterday on a space call with Wolf. And that's why you got to follow Wolf and come to these spaces, because we be giving you all these gems pretty much for free. If you just come to his spaces, you pretty much catch everything you need to know, right? Point of the matter is, take a look at Google. I'll give you a couple plays that I've taken. Look at Google on the daily, and you guys can see this open gap here from 2-1. You see, we gapped up off earnings. We came back. We filled that gap. Every candle was pretty much red. We turn around and actually get this green camera. This is a hammer. So when that hammer comes in, once price breaks above that hammer, everybody that's short Google, not everybody, but a lot of short covering is going to happen. Right? As soon as you start to gap up in their face, they're going to cut that position. That's going to cause price to move up more. It's called trading against trapped short. So I do this a lot. And this is just for the day trading perspective, right? Because I wear multiple hats. I'm a day trader and I'm a swing trader given the right opportunity. So there's multiple components to these inside and outside days, right? If you're just trading, you just learn about inside days by themselves. They're very powerful, but you know just enough to get hurt. You won't see consistent profits because there's other components such as higher time frames, right? Such as the overall markets and the sectors. And just to break that down, I'm playing defense, and the reason why my swing trader hat's in the trash can. If you take SPY out right now and look on the monthly time frame, you'll notice that this SPY current bar is inside the previous bar, right? And the range of the last bar is so dramatic. I don't think there's a way we're going to hit the top or the bottom of that range. So we have an open inside bar, so that means we have no direction. That's why if you look at SPY on the daily chart here, you're seeing a lot of sideways consolidation. Today we gapped up, and honestly, for the majority of the day, we aren't really doing anything, right? So this is where you need to combine stuff like that to say, how can I adapt my strategy to doing this? And for me, when the market's like this, I ain't swinging, right? So because I don't have any directions, I'm focusing more on plays like this. Now, I'll give you Felt's setup that I had today. This didn't play out as well as I wanted it to. This is ticker BA. Called this one out yesterday too. We go inside. So if you look at BA, the price of this bar right now is inside the price of the previous bar. Meaning, if you take a daily chart, you'll see that I'm just breaking this down in a very simple stance because I know I got new people here in the building. You'll see that the bar from 2.7 on the daily it engulfs the current bar that's inside, right? So what you want to do is combine that with multiple time frame analysis, right? So what I want you to say is, hey, there's my inside bar. I'm gonna take it on the break of that high. But the real question is, if this thing triggers, how does it affect the next higher time frame, right? So that's the daily chart. If you take it up to the weekly, if that daily chart triggers, how does it affect the next time frame? Well, the weekly chart is advancing. It's called continuation. So we're continuing up to the next target. And how does that affect the monthly time frame, right? So if you go to the monthly chart, because a lot of people don't even look at a monthly chart, we're nice and green. So when I get into a trade, I want all the time frames in my favor. First things first, because everybody will be buying at the same time. 2, I feel more confident holding that particular trade. And 3, you just have a better probability when all your time frames align. So that's an inside day. And I'm using those for quick scalps primarily until the market works itself out. Now, honestly, I haven't been swinging. The last swing I had on was Visa, and I'll walk you through it real quick. So if everybody looks at a chart of ticker V and turn your attention to 131. Okay, so this is what I call a multiple time frame hit. Okay, so Visa, look at the chart, the bar of 131. Right, so this is the inside day. Right, and the target of this inside day was the previous bar, which is known as the outside day. So my question again, if that inside day triggers, how does it affect the next time frame? So take that up to the weekly. Looking at the weekly chart, if we go from day trade trigger to target, which is that giant green bar you see here, what's going to happen is you're going to trigger a weekly outside bar. That means I have full conviction to hold that trade because that outside bar is a buy signal, right? Because once we break that outside bar, we're going to continue. And so for me, how does that affect the next time frame? We're nice and green at the time. So this particular trade worked out pretty well. I caught this for about 170%. I got in at the with weeklies at the 226 and then sold for 233, and I was in and out. But I use multiple time frame analysis and price action to determine the overall strength of the market and, more importantly, the strength of the sectors. So once you know if your market's strong and your sector is strong, if you're trading JPM, you're trading financials, you're trading XOM, you're trading energy, and so forth. If you know the market's strong, you know your sector is strong, and you can get an inside and outside bar in particular in that sector, you have a very high chance that thing is hitting. You're going to make money. You're going to get paid. You can get paid that day, and you can switch it up, right? You can go from a day trade to a swing trade. You can roll into next week's contracts, but everything has to line up. All the time frames must line up. Your sector must line up, right? And if you don't have these layers of confirmation, you're going to get caught up and get trade chopped. And this is why my swing trading hat right now is in the trash can. I'm not even looking at it anymore. I got my day trading hat on, got it on backwards, and I'm in and out. So that's a little bit about what I do.
Perfect. Juicy, I thought that was a great breakdown there of all the areas. Thank you, so much for coming on and sharing. And definitely you have a great Discord for people to check out as well, where you do a lot of these live trades and put stuff out. So it's always good having you on, man.
Yeah, no problem. I'm actually about to, because I know we're about to roll from speaker to speaker. I know you got one at 3. I got Power Hour at 3, so I'm actually about to hop off. And I'm gonna catch you on the next one.
All right, take care, brother. Okay, stock talk. We're doing about 7-minute slots. If you want to go from now till 2:50, if that works. I thought that you have, obviously a pretty great trading style. I know you've talked about it pretty extensively, but there's definitely some new people in here who probably haven't heard of it and would love for you to share it.
Yeah, I think obviously 7 minutes probably not enough to talk about everything I do with trading,
It's the
but I
taste.
think
Then they can come in your Discord and find the rest.
there you go. Yeah, but what I think is a good thing to cover, which I can cover in about that time, is sympathy trading. I think for new traders who maybe have a difficult time generating their own trade ideas or generating ideas for which tickers to trade, I think sympathy trading is something that is um, really the golden goose in that area. You can really decisively and quickly generate your own trading ideas if you know how to sympathy trade. If you're a new trader who doesn't, there's a couple things I recommend doing. The first thing is build a personalized watch list that's separated by the sectors that you're interested in or the sectors that you normally trade. So, and they don't even have to be sectors in terms of, the official economic definition of a sector, but just sectors in terms of industries and groups of companies that you enjoy trading. So, for example, a lot of retail traders enjoy trading electric vehicle companies. There's a lot of traders that enjoy trading, metals companies or online gaming and gambling companies. Any of these sectors, you can build a watch list categorized by the sectors, and then add, between 4 to 8 stocks under each sector, preferably with variable market caps, so you get better breadth and understanding of, how the sector is moving, whether the small caps, large caps, or mid caps within the sector are responding best to the trend. And you can also do things like monitoring volume between those categories. So you can go back on 1 month, 3 month, 6 month timeframes and look at the volume inflows or outflows. And that can help you assess when a sector is hot, when a sector is going to get hot, if there are institutional money flows coming into the sector, if there's institutional money coming out of the sector. Assessing volume over several time frames can give you a really good picture of that. So once you've built a watch list categorized by sectors, you filtered with a number of stocks, and you've learned how to analyze volume, then you could graduate to sympathy trading. And sympathy trading has really been my bread and butter for my entire trading career. And what it's essentially hinged on, to put it in the simplest way, is there's always a big runner in the market almost every day. Actually, every single day there is. There's some runner somewhere in the market, that's up substantially, has a lot of buy side volume, is rallying, aggressive bids. Everyone sees it every day, whether it's a stock you're trading or not. There's always at least one. What sympathy trading is based on is identifying primary runners. Okay. So an example I'll use is DWAC and Fun, which I've used this example in the past, but it's just the most recent successful example. That's a good way to explain it. But when DWAC first started running, when the Trump SPAC news first came out, or whatever that was, a few months ago, and the stock was up like, I don't know, 110% in a day. A lot of people's first reaction is, how do I find an entry into this stock? How do I find an entry into this high momentum play where the bids are super aggressive and there may not be a lot of technical price history, right? When you have a SPAC that goes from 10 to 80, there's no technical price history. That SPAC has been sitting at $9 or $10 for months, right? So there's no levels that you can read on the intraday chart when you see a move like that. So it makes it very difficult to enter those momentum trades, and especially when it's a de-SPAC. In other cases as well, but especially when it's a D-SPAC. And so in that case, what I did instead was tried to find companies that were related as sympathies. And obviously we found Fun and, added it at $1. And the next morning it was $24 for a 2,000% move in the equity overnight. Now, granted, that's not going to happen in every sympathy trade. That's an example of a very successful one. And not all sympathy trades are successful. But the beauty of it is it inherently gives you a better entry because there's less momentum, there's less bid hype, and you can get a safer and better entry on a sympathy trade than you would trying to enter the momentum of a primary runner. And that's why it works effectively, because a sympathy trade doesn't need to be a company that's related. Like Funware was related. Fun was related because they built Trump's 2020 mobile application. And so you could draw that connection to Trump from there. But it doesn't have to be that kind of connection. A sympathy trade can be a company that's simply in the same sector, right? Today, if you looked at Enphase, which obviously the move fizzled out, but if you looked at what Enphase was doing to the rest of the solar sector, especially after hours yesterday and today, the solar sector is a great sector to sympathy trade. You saw SEDG moving, you saw FSLR moving, you saw TAN moving, right? All of these things were moving. Why? Because people woke up and decided that solar was great? No, they're moving because ENPH beat earnings. And because of the ENPH reaction to earnings, you see additional money flow come into the sector. That volume analysis that I was talking about earlier can help indicate that. But all you need to do to sympathy trade is identify a primary runner, find a related company that has ran with it in the past, and enter that company before the algos and the volume flow comes into it. And you'll get better and better at this over time. But another thing that will happen over time is that you will develop connections of stocks that are sympathies to each other. Pola and PPSI are two great examples. ChargePoint and all of the other charging related companies are great examples. ChargePoint, NVVE, and Volta were three sympathy trades I gave in my Discord this morning in response to DCFC, which was up 100% today, right? And what did it create? It created a reaction in the other EV charging stocks. These sympathies is the one consistent strategy that regularly works. And it's easy to do if you're a new trader because it doesn't require a breadth of fundamental knowledge or a breadth of technical knowledge. It just requires decisiveness and the ability to make a connection between two stocks. Another example, which I've given a few now, but another example is AFRM and KPLT. If anybody remembers when AFRM was running a firm, well, on its first run, KPLT was another subprime lender that was related to a firm through a waterfall program, quote unquote, where they would get customers that weren't accepted by firm would be knocked down to catapult. That stock ran 50% 3 sessions in a row in response to the Affirm run. So these are the kind of moves you can get from sympathy trades, and they don't require any special knowledge or esoteric knowledge to do it. It just requires decisiveness and the ability to draw a connection between two companies. So it's something that I encourage every new trader to do. It's something that's my bread and butter. It's something that I do every week, and it works very exceedingly well if you can be decisive on your entries and you can identify those sympathies well in advance of the move, which if you're good at it and you have a watch list built out and you have studied these in the past, you will be able to do that effectively. It's something that a lot of new traders that I've encountered and taught how to do it have found a lot of success doing it on their own, which is really the goal here, I think, on FinTwit in general, is to make all new traders self-sustenant and give them the ability to generate their own trade ideas. Because the reality is you can spoon feed off Twitter and FinTwit and make money, but you can't do that forever. In a choppy or inconsistent market, you need to be able to generate your own ideas, or you won't be able to be profitable in the long run. Being profitable over a year or 2 years from spoon feeding is one thing. Being profitable over 10, 15 years by generating your own ideas is another thing entirely. So if you're a new trader, I really encourage you to explore sympathy trading, really encourage you to learn how to do it, because to me, it's the most simple and straightforward trading strategy there is. And it's also very consistent.
Perfect. Yeah, it's something which I've been exploring a lot more, and is always great to, be following Stock Talk, be in his spaces. You can check out his Discord as well, link through his bio, where he'll be dropping these plays regularly, pre-market. I know that he wakes up several hours before market open to start scanning and, creating a watch list and finding these plays. So really good stuff. Appreciate you sharing that with us, Stock Talk. Okay, and we are going to wrap up soon, but my friend Ashley popped up here with an interesting little piece to trading style. So I just want to do like a 3-minute teaser on this because we are going to potentially do a whole space on this, but it may be helpful to hear, and that is just like 2-3 minutes on trading, but in the crypto/NFT world, which I think is like an interesting little tidbit here.
Hey, yes, thank you for having me on. Through my trading of NFTs over the past 7 to 8 months, I've learned some really key things. A lot of people just kind of think it's random. I mean, and a lot of times it is. Sometimes there's going to be pumps for no reason or dumps for no reason. But basically, what I do, like a lot of the time, a lot of people know in NFTs, you really have to hustle for whitelists. So that's one of the first major things is to get whitelists for bigger projects or for even smaller projects, just kind of whatever you can get to get those NFTs like at the cheaper mint price. One of the secondary things I do once you do mint the NFT is you want to give it about 1 to 2 days pre-reveal between the time you buy it and before it reveals, because a lot of the time post-reveal NFTs will go down significantly. There's a lot of examples, but one of the most recent examples is Lives of Asuna, with one of the anime NFTs that has been kind of similar to Azuki. Basically, with the post reveal, it went from 3.7 ETH to 0.48 Ethereum of worth. So that was over a 3 ETH loss if you waited post reveal to sell your NFT. So obviously some NFTs do not do that. But honestly, like the surest bet is to sell your NFT pre-reveal and then buy back post-reveal for a much cheaper price, and you get to actually choose what rarity you want and things like that. So those are really like just the basics, like very, very basic that can help you make pretty decent amount of money on each particular mint, so you're not losing money consistently by waiting till post-reveal.
I love it. It's a great little teaser. So hopefully people are, listening up because listen, there's money to make in a lot of areas and we're trying to give successful trading styles and a lot of these actually kind of factor over, but there's differences in different worlds. So thank you, Ashley, for the teaser. We'll talk and plan out something more, focused on that, get the audience into that. Really enjoyed this trading space. It seemed like we got a great responses. We had 400 plus people in here listening. We covered several different styles. Again, I told the speakers in the beginning we weren't going to do wrap ups on this one because we do have that upcoming space at 3 p.m. But we had Daniel who walked us through his style, specifically using MACD and RSI on 1 hour and 4 hour timetables in order to consistently place successful day trades. Miguel also discussed using the SMA, specifically the 200-day SMA, along with a couple of other indicators to supplement it. Ben had a really unique approach to this. He was talking about finding the support and resistance and complementing that with the Fibonacci sequence and a couple of other indicators. Again, for Ben, I do have this pinned up top. It is here, I'll just repin it real quick. This is a course that Ben put together. I have the chance to look through this course. I really like what I am seeing. I think a lot of people want to learn stuff like Fibonacci's and understanding moving averages and Bollinger Bands and so much more. But they don't really have a great place to learn it. So Ben put a lot of time and effort into this course. I can tell I've been reading through it. And again, you can get 10% off that. That is pinned up top in the nest. So I recommend checking out as well as checking out Ben. And Stock Talk went over sympathy trading and then a little bit of NFT stuff from Ashley. Stock market news, just wanted to give you the last minute or two if there's anything else you want to share, and then I know we are headed into your space.
Yeah, my space is with the street, me trying to get two things out at once. Let me go in and link that up at the top. Fantastic space, as always, filled with so much knowledge. Make sure you're checking out all these speakers. Wolf just kind of gave a really good rundown of what was said here. But yeah, don't just listen to what was said here. Go in and click into the profiles of the people who said that and check out what they're doing and kind of explore it. It's really, the follow button on Twitter is really easy to hit. It's free. There's nothing like that. So make sure you're doing it, checking out what all these people are doing. And big shout out to Wolf Financial for always putting on top class spaces. I linked the space at the top, which we're about to be going into, if you want to hit the reminders to get a notification when we go live, but it will be pretty much instant after the spaces. So if you're following myself, Wolf Financial, Stock Talk, a couple of the others, you'll see that at the top of your timeline. So excited for that. Fantastic spaces. Big shout out to all the speakers who came in and made it a fantastic spaces. And shout out to all the listeners who came in and make it worth doing and getting some value out of it. So big shout out to everyone. And yeah, back to you, Wolf.
Thank you. Yeah, I have one more thing I do want to say, but Miguel, do you have something just 5-10 seconds in here?
Yeah, I just wanted to say, if anyone has any questions on the blog post that I linked out, I saw some people are heading to the website. Please direct message me. I'm happy to help anyone and everyone that has any questions. If they're building out their charts and they can't seem to get something right or something like that, please reach out to me. I'm happy to help.
Perfect. And the last thing that I did just want to cover is we are going to be having at least 3 more spaces today, something like that. We've got this next one, which is going to be at 3 p.m. EST starting in just a minute. And then 7 p.m. EST, we'll be doing trending ticker analysis with Ben Zinga. So don't miss out. If you enjoy the spaces, please make sure you're checking out our speakers and following myself and the other co-hosts. You will always see our spaces at the top of your timeline. And Evan, I'll do a spaces shout out in the street space, or a calendar shout out in the street space. So we can take that on over there so we can get started on time. All right, everybody, take care. I'm going to end this one here, and we'll see you on the next.